Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings. Today we're diving into a Bio-Rad report, and let me tell you, after looking at this, I feel like I need a lab coat and a microscope just to understand my own investment portfolio. Let's see if we can figure out what's going on. The company Bio-Rad Laboratories filed this report on February 21, 2025. This report is called a Form 8K, which is basically a quick update companies give to let investors know about important events. In this case, it's about an update on their investment in another company called Sartorius AG. Bio-Rad previously talked about this investment in their yearly report, the Form 10K, filed on February 14, 2025. This new report gives us more details based on Sartorius AG's financial results. So, what's the deal with this Sartorius investment? Bio-Rad owns a piece of Sartorius, which is a company that makes equipment and provides services for the pharmaceutical and life science industries. Think of it as a company that helps other companies make drugs and do research. Since Bio-Rad has money tied up in Sartorius, it's important for them and their investors to know how Sartorius is doing financially. This report is all about giving us a snapshot of Sartorius's financial health as of the end of last year, 2024. Let's get into some numbers. As of December 31, 2024, Sartorius had a lot of assets, meaning what they own. Their current assets, things they can quickly turn into cash, were about 2.1 billion euros. Their non-current assets, things like property and equipment, were almost 8 billion euros. On the other side of the balance sheet, their current liabilities, which are debts they need to pay soon, were around 1.4 billion euros. Their non-current liabilities, longer-term debts, were about 4.7 billion euros. And finally, their equity, which is essentially the value of the company owned by the shareholders, was around 3.9 billion euros. Now let's talk about how Sartorius performed during the year. Their sales revenue, the total amount of money they made from sales, was about 3.4 billion euros. Their gross profit on sales, the money they made after subtracting the cost of making their products, was about 1.5 billion euros. Earnings before interest and taxes, often called EBIT, was about 393 million euros. This is a measure of their profitability before considering interest payments and taxes. Their net profit, what they actually earned after all expenses, was about 137 million euros. Cash flow is super important because it shows how much actual cash the company is generating. Sartorius had a positive cash flow from operating activities of almost 977 million euros. This means their core business was bringing in a good amount of cash. However, their cash flow from investing activities was negative, about negative 426 million euros. This likely means they were investing in things like new equipment or acquisitions. Their cash flow from financing activities was also negative, around negative 128 million euros, which could be from paying off debt or paying dividends to shareholders. It's important to note that these numbers come from Sartorius AG's financial statements, which were prepared using a specific set of accounting rules called International Financial Reporting Standards, or IFRS. Bio-Rad is just sharing this information and isn't taking responsibility for any mistakes in Sartorius's reporting. They're basically saying, hey, this is what Sartorius is saying, don't blame us if something is off. If you want all the nitty-gritty details, you can check out Sartorius's annual report on their website. But remember, Bio-Rad is not responsible for that Sartorius website or the accuracy of the information they provide. Now, what does all this mean for Bio-Rad? Well, Bio-Rad's investment in Sartorius is likely a strategic one. Sartorius operates in a growing industry, the life sciences and pharmaceutical sector. If Sartorius does well, Bio-Rad's investment will also likely do well. But of course, there are risks. The financial performance of Sartorius impacts Bio-Rad. Any downturns with Sartorius are bound to reflect on Bio-Rad as well. Looking at Sartorius's numbers, they seem to be a pretty solid company. They have strong revenue, good cash flow, and seem to be making investments for the future. However, their debt levels are something to keep an eye on. Those non-current liabilities are pretty significant. A reasonable target price range for Bio-Rad, considering everything, would be in the $350 to $420 range, based on a combination of factors like their earnings, revenue growth, and overall market conditions. I'm leaning slightly bullish on Bio-Rad. While there are definitely risks involved, their investment in Sartorius and their overall position in the life sciences industry make them an interesting company to watch. Thanks for watching. If you enjoyed this episode of Corporate Decoder, please subscribe, like, and comment below. Let me know which company's filings you want me to decode next.